Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Welcome to Exercise Radio. I'm Don McDonald, along with the hyperactive exercise guru, Mr. Thomas C. Cock.
You could hardly call me that, but okay, I'll go with it.
Well, you were like doing jumping jacks.
Yeah, I'm trying to get going again. I had a class this morning. I come down a little bit. I got to get back up to peak performance.
Really? Is there another burst of adrenaline in you?
And
do you have it in you?
Peak performance is very low at this age, so the expectation should be similar, if you don't mind.
Peak performance is kind of like 3 a.m. when you were in your teens.
Yeah, exactly.
Right?
Yeah.
Okay, I've reached the conclusion. Hey, everybody. Welcome to the show. I'm Don. That's Tom. This is Talking Real Money, actually. This is where we talk about, real money and things that involve real money and the things you do with your real money, and particularly how you invest that real money. And we invite you to call us during the show or anytime at 855-935-TALK, 855-935-8255. And remember, we like to reward those who help us with a call, who call us so that we can help others, with a little gift. We give you a gift. How many shows give their callers a gift?
Not many.
And it's a true gift.
Yeah.
It is a true gift. We don't charge you shipping, handling. No salesman will call. There's no annoying stuff. It's not, it's an actual, it's softcover book called Financial Physics.
I thought we were giving away equity index annuities this week. So, okay.
A bit of a letdown. No, we can't give those away because we need our 18% commissions.
Boy, do we ever.
On those.
Yeah.
Equity indexed annuities. Much loved by both of us.
Yeah.
He said facetiously.
Well, I always, and by the way, when we did the class this morning, I take them to the paragraph that's in the retirement guidebook that says, these are sold by lightly regulated insurance salesmen, and they're not regulated by the SEC or FINRA. Is that a product you sound like you want to run and put your money in? I'm thinking not.
The interesting thing about this whole business is that the Securities and Exchange Commission several years ago sought to regulate equity indexed annuities as an investment because they are sold as an investment.
I know.
And the SEC thought, well, then we should regulate them, not state insurance commissioners. And the insurance industry spent tens of millions of dollars.
K Street was working late hours that week.
They lobbied against it and got Congress to stop the SEC from doing such regulations.
But they hold them out as an investment. You're getting the returns of the stock market with no risk. Doesn't that sound like an investment?
Well, in the spirit of hypocrisy, they honestly they know their investments, but they hold them out as insurance vehicles.
Yeah, well, they are a contract with an insurance company. Now, you very kindly, by the way,
sold.
Well, you very kindly dug into them, and we looked at them, and wow, I mean, the complexity, the likely returns. It's amazing, absolutely incredible.
Yeah.
So
yeah, it's like driving. Buying an equity indexed annuity is like driving down the highway at 70 miles an hour with your windows completely iced over.
Try not to do that, but yes.
You can kind of tell that you're outside. But other than that, you really don't know where you're going or what you're getting yourself into.
Yeah, I think that's a good way to put it. So, anyway.
I love my little analogies. Anyway, call us at 855-935-TALK, 855-935-8255. And for all of you out there, and I know you are legion because you write to me all the time, who are worried, well, should I get into the stock market? It feels a little too high right now. Maybe I should wait until it goes down.
Now, the good news is this week it
went down.
Yeah.
Not just a little, it went down quite a bit. The NASDAQ was down 3%.
Oh, there's your buying opportunity. Sneak in, quick.
So if you were waiting for it to go down, it did. Now, is it going to go down more? We don't have a clue.
No, we don't know. And by the way, for the year,
Yeah. Oh, it's been a great year.
I mean, if you just quit now for the year and you had 60% of your money in a globally diversified stock portfolio and 40% in bonds, you made 8%.
I have an idea.
Wow, that sounds horrible.
I have an idea. Wall Street just close down for the rest of the year.
It's sell in May and go away, right? I mean,
Right.
we'll see you.
No, I just think we should just say, well, this is a good year. Let's stop here.
Mm-hmm. Yeah.
We're just going to sit here for the rest of the year. Then we don't have any chance of going down.
Yeah. So anyway,
That's not the way it works.
But you really, I mean, I know we're kind of making fun about all this about you getting it, and the numbers are horrible. It's $135 billion that have come out of stock mutual funds this year. But you really shouldn't be doing that kind of work. We'll talk more about this. You really need a plan. It should have nothing to do with the market at all, period.
Yeah, you shouldn't pay attention, despite the fact that I give you the numbers on the mornings on Como. You shouldn't pay attention to me. 855-935-TALK is our number, 855-935-8255.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Well, howdy, partner. Welcome back to Talking Real Money, the Real Money Show here on the radio.
Helping you in the wild frontier that is investing.
It's on your phone, too. Yeah, it is. TalkingRealMoney.com.
Indeed it is.
Just find it. And call us at 855-935-TALK, partner. And let's just go take a question, shall we? David,
absolutely.
You're next. Welcome to Talking Real Money.
Hi, David.
Hi, good afternoon. Fellas, a few weeks ago, we were talking about a Vanguard Total World Fund, VTWSX, and you were talking about the blend of that to match your risk tolerance, and it sounded fantastic. I went and looked it up, and the fund is closed. I hope you have something similar you could recommend to take its place.
Yes. Vanguard has what they did. Vanguard did something. Vanguard used to have two classes of shares: the investor shares and the Admiral shares. The Admiral shares used to have a $10,000 minimum. The investor shares had a $3,000 minimum. What they did was they put the $3,000 minimum on the Admiral shares and then closed the investor shares. So basically, the Admiral share version of it is exactly the same, but with a lower expense ratio.
The expense ratios, and it's VTWAX.
Which is easier to remember because it's VTWAX.
Yeah, and is there a minimum on that one, Don? I can't remember.
3,000.
Okay, so if you don't have the 3,000, you can go buy the exchange-traded fund that is managed similarly. It's called V as in Victory, T as in, I'm glad I get to say this, Tom, VT.
And it comes unwaxed. It comes completely unwaxed. If you want to wax it, you have to do it on your own. So
I don't want to get waxed again. No, I mean, you can buy that, and I think there's no minimum on that and no
one share minimum, which is $90 or something like that.
Yeah. So you could buy that for almost any purpose.
Are you insinuating that David is too poor?
He was about 75 this morning, but
okay,
I'll look at the WAX, and that's fantastic. Thanks, guys.
You wax on, David. Thank you for your call. Appreciate it.
Wax
Bye-bye.
on, wax off.
Too easy.
Wax on, wax off.
Yeah, so Vanguard, because this came up at the class today, too. Vanguard has done a lot of stuff with the investor shares and Admiral. It's hard to keep. If we're wrong about that, sure, call us and tell us we're wrong about that. They've tried to narrow all that to clean it up, I think.
Plus, I think that having a $10,000 minimum for any funds was a little off-putting for what Vanguard has always tried to do, to be everybody's fund.
Yeah.
But speaking of ETFs, and I forgot to mention this to you when we had our pre-show meeting. There was an article in the Journal.
Well, by the way, our pre-show meeting was at like 7:30 Pacific time, so you were barely awake. So I understand why. Because that's only 10:30 Eastern. That's
early.
Don't call before 1 o'clock in the afternoon.
Don't call me. Don't call me in the morning. No. The article though.
Yes.
There is some concern that with the proliferation of it, and this is something we have talked about before. When people say, "Well, why do you recommend the mutual fund where there are ETFs?" Well, this article actually talked about that.
Oh.
It discussed how there is a distinct possibility that should the market go sharply negative very quickly, there are already a lot of market makers who are stepping back.
And this happened in 2011.
The flash crash.
Flash crash. So this is where, and you need to explain, the way the money is managed in a mutual fund is different than an exchange-traded fund.
Absolutely.
And an exchange-traded fund is a derivative.
Yes.
I know it's a dirty word, but it technically
Yes.
is a derivative.
When you buy an ETF, you don't actually own a basket of those stocks. There are people on either side of the trade who have agreed to either sell the stocks or buy the stocks at
Correct.
whatever the market price is.
If they
to
decide not
maintain
to,
that.
then you're in trouble.
And
That happened.
This is not going to be a problem with a VT, except in the most extreme circumstances.
Yeah, you'd have to have a lot of sellers to make that happen.
But there are so many eclectic ETFs out there now that are niche ETFs that are in lightly traded securities. And the article talked about some of these ETFs that invest in non-publicly traded debt securities. And they have counterparties, people on either side who are willing to buy or sell, supposedly. But it's very few people. And if they step back and say, I'm out of the market, sorry, got no money,
Then you get trouble.
right.
Yeah.
Then you could find the price of your ETF, even though the underlying securities have not been affected at all, you could find the cost of your ETF plunging because there's no market maker to make that money available to pay off those transactions.
Now, before you freak out, we're really talking about the ones at the fringes.
And actively
Generally.
managed ones,
Actively managed.
some of those.
Again,
yeah.
VT I don't think would have a problem generally.
But we have to, this is where we have to just tread very lightly and say, could it? Yeah.
Yeah. Mm-hmm. Yeah.
Will it? Maybe not. Probably not. Probably
the
not.
struggle-
But with a real mutual fund, though, when you buy into a real mutual fund, an open-end mutual fund or a closed-end mutual fund for that matter, you actually own a piece of securities that are sitting in an account somewhere in safekeeping.
And that is different than the exchange-traded fund. By the way, the other thing, and the reason that John Bogle did not favor exchange-traded funds, he didn't even want Vanguard to get in the business of them because they're traded during the day. Mutual funds are traded once. People they forget that. So all the buying and selling of ETFs, it has created, the returns have not been as good as index mutual funds. Not always, but over time that has been the case.
And they also do not necessarily track the value of
Indeed.
the underlying securities.
Correct.
They can trade at a slight premium or discount, whereas your closed-end fund is only priced, or your open-end fund, your regular mutual fund is only priced at the end of the business day.
That's it.
So there's a little bit of a risk you take because if you buy in on Monday, you don't get Friday's price.
Yep.
You get Monday you get the price at the end of trading on Monday.
Bingo.
That's what you buy in at.
Yeah, these are small points, but they're
But
if
they're
you really want
important.
to, if you want to dive into it, then go ahead. I would still just use, if I had a choice, I would still use the index mutual fund rather than the exchange traded fund.
As would I.
Yeah.
And only for that tiny elimination of that little bit of risk.
Yeah,
it's just
exactly.
not a big deal.
Nope.
So don't panic. But this is a primer in a way. Mm-hmm. And we like to educate on this show. As a matter of fact, that's what this whole firm is devoted to, is educating you. Our firm, our show, our newsletter, our Real Investing Journal, we devote ourselves to helping you understand money. And you can call in your questions anytime.
Yeah, today's a good day because the sun is out, beautiful day, and
what is it, like 80?
it's something crazy.
It's like
Kelly's
Florida
she
weather.
said, yes, it's 80. I know I'm indoors doing your show. I get it. I understand.
You
Think
go
how
live
happy-
outside.
think how happy
Hey,
the-
let's do the show from outside in Como Plaza.
Think how happy the employees were this morning to be there bright and early on a Saturday morning on a beautiful day to help with the class. So
Well, and that's how thrilled the callers are to be in their car, in their house, calling Tom and Don to talk about money when they could be out boating. Just don't get in the water. It's too darn cold.
The plants are already coming. The seeds have already growing out of the ground in less than a week. Usually it'll wait like 3 years here. Anyway.
It's spring, isn't it?
It's been fast, man, fast.
Yeah, well, it's about time. I think it's a little late. 855-935-TALK is our phone number. Call anytime or call while we're live, and you get a copy of Financial Physics. 855-935-TALK.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Apparently, there is no traffic in Seattle.
No.
It's none whatsoever. Everybody's out walking.
Yeah. Or boating.
Or boating.
Yeah.
Is
Not
any
swimming. The
jams?
water is too cold. Do not swim. I heard it last week on Como. It's warm outside, but the water is still really cold. So don't
You
do
will
that.
die, so don't go in the
Don't do
water.
it. Well, you won't go in the water anyway, unless it's
I
85
think it's
or
too
whatever.
cold
So,
out there. You guys are crazy people.
You only went in Lake Chelan the time to rescue your phone. I'm sorry.
It was 12 feet down.
I'm
Like
not
at the
going to
bottom
bring
of
that
the-
story up again.
Thank God that lake is clear, though.
Yeah, you could
Holy
see. Yeah, that
cow.
was something. Yeah.
That is quite the clear lake. You could just swim around and drink the
It
lake.
was just above the lake was all smoky, but under the water it was all
Under
clear.
the water, it was beautiful. If I could breathe water, it would have been a great place to hang out.
It'd been better.
What was? Speaking of Jack Bogle, the Vanguard guy,
Yeah.
who passed recently. We have always been huge fans of Jack Bogle.
Well, we're
We think
lucky
he
enough
gives
to
great
interview
advice.
him. Yeah, we're lucky
Yeah.
enough to talk to him a few times, and he's. And I don't want to get in the semantics here, but he's recognized as the father of the index fund. I guess the father.
Oh
of
yeah,
the
there's a
public
couple of guys who would
index fund.
argue at Wells
Yeah,
Fargo.
yeah, okay, but the father of the public is the way I'd
Yeah.
put it. But anyway, I mean, and so recently. I think it might have been as recent today or yesterday, but the Wall Street Journal found an article that he had written that never been published.
What?
Yeah.
Really?
Yeah. And in it, he makes the case for a few things that I think you really should still pay attention to. That he really wanted us all to, and he was a guy, by the way, that looked out for you. I'm talking to you in the audience. He was not. It was not about him. He could have made a lot more
he
money
looked out
doing
for
other
me
things.
too.
I know he did, and you.
Yes, he did.
And so let's just talk about a few of these things. Number one, he said, focus on costs. Now, let me give you a couple of numbers. I just find this fascinating. You could own the Standard & Poor's 500 index fund at Fidelity. Now, Fidelity has a S&P 500 index fund for 2 basis points. 2 basis points. I think that's 0.02. I think I'm correct when I say that. Or
I'm pretty sure you're right.
Or if you want to own the S&P 500, you can go to Ridex. Lovely people that they are that use leverage,
Oh
etc.
gosh, what are they charging?
They will be glad to sell you the same product. I find this interesting about gas stations too. Anyway, the same product across the street for a higher price. The same product for 2.33%. 233 basis points or 2.
Okay, wait a minute. I got to look
Go
that
ahead.
fund up.
Two-
Ridex.
I-
Ridex.
I'll find it here for you.
You just keep talking while I'm looking
okay,
it up.
so that was one. I mean, he said pay attention to cost because over time, huge difference. I was going to try to find the ticker for you on the
RYSPX, is that it?
it's a C
Oh, no.
share.
Let's see.
It's where is it? It is RYSYX.
RYSYX.
And please
Okay.
don't go buy it. Please. Really.
Well, no, that would be dumb.
Yeah, it would-
that would be like the gas station.
Right,
You see
that's what I
one
said,
at,
right.
at
I know.
$3.50 on
And
one
then
side of the
across
street, and
the
the other
street-
one at $4.10, and you're going,
Well, how do they stay in business? Anyway, that was one of the things. So pay attention to cost.
laundering money like the car wash in
Selling something
Breaking
out,
Bad.
yeah, there you go,
Yeah.
out the back door. Number 2,
Yeah.
he says diversify broadly. I mean, this is one of the key. Owning concentrated positions in anything is a huge risk. There's no expectation it's going to do better than the market. So diversify broadly. Then the one that he always used to, we always get in the argument with him about how much small cap and value, and he'd always say, hey guys, before you even get to that, you got to decide how much risk, how much in stocks and bonds you should own for the rate of return you need and your ability to take volatility. I always thought that was great.
Well, we are huge advocates of that with our risk quiz at TalkingRealMoney.com.
You can take the risk quiz absolutely free, no obligation, no salesperson will call. And he also said, stay the course.
Wow. That pretty much says it all. It really doesn't that say
plan,
it all?
Do the discipline, and that's it. Stay the course.
Low cost.
That's it.
Stay the course.
Yep.
I don't think we can add anything to that. I think that it's over. All right, thanks for listening.
Appreciate it.
Yeah, we're just good. I think we retire.
That's it. It's all been said.
Well, you just said something else.
I'm sorry.
But you can still call if you want 855-935-TOM.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
Talking Real Money has been permanently canceled because they've said everything there is to say.
Pay attention to costs, diversify broadly, allocate prudently, and stay the course.
Do you know how much money is in that Ridex fund?
Okay,
so you need to reset
you need to reset the table here.
Oh, you think people just tuned in?
After the bottom of the hour, yeah, sure. First of all, this is Talking Real Money. It's a live call-in show, right?
Well, except we canceled it.
Okay.
Because we've said everything there is to say.
855-935-TALK is our number. If you call and you ask a question, you're going to get a free copy of my book. Yeah.
Oh, well, that's Tom's book is identical to that book that was published several years ago that said the title I think was Everything Men Think About Besides Sex. You remember that book?
I do. I give away copies all the time.
And you open it up and it's like blank pages.
Nothing. Right,
nothing.
Whatever you like.
There's absolutely nothing. It's just blank pages.
That's embarrassing.
That's your book.
Thanks a lot. You get a free copy of Don's updated, revised, revamped, reworked Financial Physics. All right. There you go.
Reloaded. Financial Physics Reloaded.
And we're talking about, we tell you to use index or index-style mutual funds.
Yes,
but they're not all created equal.
No, they're not.
And we were giving some pretty rash examples of you could own you can own a fund that holds the S&P 500, 500 stocks, and you can do it at Fidelity for 2 basis points. That is
2/100ths of 1%.
Yeah, it's a very small number.
2/100ths of 1%.
That's
or
small.
you could spend 115 times more money.
Yep.
115 times more, and get the lovely Ridex fund, the Ridex S&P 500 Class C fund, and a Class C fund only has a 1% commission.
You gotta like
so you only
that.
pay 1% to get in.
Okay,
and
so don't tell me how much money. I want to guess how much money.
2.33% per year in expenses. How much money is actually invested in this fund?
Yeah, I'm just gonna. I'll say it's still a high number, like $300 million or something.
Half that, 160.
Okay, but still,
160 million. That's
just think
ridiculous.
about what they're making on that one fund. On you.
But I got an even better fact for you. They own the S&P 500.
Yeah, right.
Right?
That's it.
Okay?
Yep.
So they own the 500 stocks in the S&P 500.
Yes.
They own them. You own them and you just own them.
Yeah. There's nothing more to it than that.
Their turnover.
No. What?
I don't know how they do this. I don't even understand Ridex. They're very confusing.
Ridex had all the leverage products, et cetera.
Oh, yeah. They have a 3X fund and 3X Bear, 3X Bull.
You got to have that
stuff. They turn that portfolio over 1.5 times a year.
What?
151%
no, wait a minute.
turnover.
Okay, so generally when you own an index fund, the only turnover would be when they recharacterize the fund.
Yeah,
in other words, when they put
index.
when they add a company or they take one off, that doesn't make sense. How could they do? No, seriously.
And guess what? They own 10% of their portfolio, they bet within the fund. They bet within the fund. They don't own the S&P 500 because their number one holding
Yes.
is J.P. Morgan Chase.
What? Okay, how can they hold themselves as an S&P 500 fund?
They own 10% of the portfolios in J.P. Morgan Chase, so it's an actively managed S&P 500
index fund. Yeah, that's because your number one holding should be probably Microsoft, right?
Microsoft, followed by Apple, followed by Amazon, followed by Facebook, followed by Berkshire.
You get the idea. But you go right ahead. That's 100. I'm going to run the number while we get the callers on. I'm going to run the number as to how much they're making. Because that's a lot of money on $150 million.
855-935-TALK is our number. Give us a call, 855-935-8255. And, Carl, it's your turn. Welcome to the show.
Hey,
Carl.
Don, how are you?
Good.
Hey, we're good. Incredulous, but good.
Yeah, indeed.
Oh, okay. You know, I can't come out to your conferences because you live all the way on the West Coast, but are there vestry offices around in Pennsylvania?
No.
You didn't hang on one second, Carl. Just a second. There's always a but.
But, Carl, there's always a but. Don't you love it when somebody says no but? Well, that's what you're getting, a no but. We have a commercial. And after the commercial, we'll talk a little bit about that. You actually have an opportunity to possibly get a live class in Pennsylvania coming up. 855-935-TALK, the number.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-8255 is our phone number. I'm Don McDonald. That's Tom. This is Talking Real Money. And we're talking with Carl, who just happens to live in Pennsylvania. Where in Pennsylvania are you, by the way, Carl?
Philadelphia.
Philly. Oh, my wife wants to go to Philadelphia because she's got some friends.
So
in
give them your special
right,
Gulfstream deal.
It's not a Gulfstream. It's an Airstream.
Oh, okay. Pardon me. I get confused. Geez. I saw the price. I thought it was something similar. So okay.
It was $19,000.
Oh, I thought it was $19 million. There's
million.
The problem.
That's
okay.
an Airstream. That's a Gulfstream.
Right.
19 million. 19,000.
Don is getting ready for a road
I am
trip.
too cheap to buy a new one. They're $100,000. That's a lot of money.
Yeah.
Anyway, here's the deal, Carl. I am taking the show on the road. I am literally taking Talking Real Money on the road. I am going to be driving across the country. And I have promised that if anyone can get a group of 10 people together in some location that they of their choice, I will come to a class.
Okay, I will.
So get 10 people together, find somebody's living room. I'll hook it up to this summer. It will be. I'll give you the. Actually, I'm putting them up on the web.
Mid-July.
It's
right?
mid-July.
Yeah.
I'm putting the dates up on the web this coming week. I'll have my map and the dates where we're going to be in what parts of the country, and I can jog my route a little bit if you let me know in advance. Because I haven't planned anything on my route between Virginia and, like, Montana.
He only has two requirements to come to Philadelphia. No Eagle talk and one big cheesesteak waiting for him. Right? Those are the only
no
two
problem.
things? Okay. No problem. That was easy. Thank you.
That was easy. Wow, you are a terrible negotiator if that's all you get from me. You are not going to be my agent.
Okay.
I hate to say that I am. By the way, there's one other thing you could do as well. I think we still have some videos up too, right, of your classes and stuff, of my classes?
We don't. They're online,
really
but I'm redoing them. But I could put up a link to they're 3 or 4 years old, so they're older videos. But I could put up a link on Talking Real Money, which I'll do after the show.
Carl,
so you can
thank
go watch
you
a
for
video.
your call.
Or I'll come visit you, Carl.
Yeah.
Okay.
Okay, great. So my question is actually directed at Tom.
Uh-oh. Yeah.
Mostly,
Oh,
Tom,
good. I get to take a nap. You guys go ahead.
Okay, all right. Tom, one of the funds that I don't want to say you recommend, but yeah, people consider, is the Vanguard Global Stock Index, right?
Yes, sir.
Okay. So half the assets are in foreign stocks, correct?
Nah, it's more like about 35%.
Oh, look it up.
35%. Okay.
Yeah.
Well, here's my question though: when interest rates go up and the U.S. dollar goes up, won't the value of that part of that portfolio go down because there's no active manager there to maybe switch things around or currency hedge?
That's exact. Yes, Well, they probably do some currency hedging.
It is currency hedge.
Yeah, but
they do currency hedge.
But it's not an active fund. It's an index, right?
Yeah, but they still do hedging.
You have to do currency. You really do on an international fund.
Can't avoid
almost
it.
everyone does currency hedging to maintain a dollar-denominated value,
Yeah,
and that's all the hedging is doing. It's not actively picking hedges. All they're doing is buying hedges that allow them to maintain a dollar-denominated value.
Yeah.
Does every international fund do that?
A lot of them
I would
do.
say, yeah. I mean, no, because I'm not going to say yes because I don't want you to call me and tell me one doesn't. But I happen to know that the funds that we believe in, Vanguard and Dimensional, they definitely do.
Okay, I wasn't aware of that. Okay, Don, back to you. How do I get your physics book?
You're getting one.
You're going to get one. We're going to mail it to you in a few weeks, okay?
Oh, okay. Well, I didn't
we'll give you a call and get your address.
No, they're going to call you and get it.
Oh, okay,
we don't
great.
take everybody's
All right.
address. So.
Hey, thanks a lot, guys. You have a great show.
Thanks, Carl.
All right, thank you, sir. 855-935-TALK is our phone number. You know what's weird is I'm typing in VTWAX into Morningstar, and it's not coming up. Don't tell me they've changed the symbol.
All right, you check on that. Let's go back to the phones.
Man, I'm confused now. All right, Gaurav, you're up. Welcome to Talking Real Money.
Hey, thanks for taking my call. I have a question about all of this impact from the tariff wars. And
yes,
the impact we are seeing on some stocks or the stock market on the whole, is it just notional for now, or have the tariffs that have been implemented really started impacting these specific companies that are, whose price is just dropping right now?
Great question.
Great question. And now I get to give a little lesson on how the stupid stock market works. The stock market, because it's made up of individuals who are always trying to gain an advantage over other individuals minute by minute, it is always looking ahead. Everybody is guessing. They're looking ahead. Last week was a perfect example of this. It was Sunday that Trump tweeted that if we don't settle this by Friday, I'm going to raise tariffs to 25%. Monday, the markets around the world, particularly in Asia and China, plunged. Now, there was no economic impact on any of those firms whatsoever. It was the anticipation of it possibly occurring in the future. And every day up until that Friday deadline, the market was behaving badly. Stocks were falling around the world generally, with a few exceptions. And then, funny thing happened. The president magically invoked the tariffs. Now, again, they don't affect anything yet because they're not going to be charged until the goods hit ports in the U.S. Tariffs are charged only on goods when they hit a port in the United States, and then they're charged to the people who are picking up the product.
Right, yep.
You know, like if there's a big box of iPhones coming in, Apple will then pay the 25% tariff to the U.S. government. So it couldn't possibly affect their bottom line. Then on Friday, though, when the tariffs were now a reality, the stock market actually closed higher.
And it had a 450-point swing from where it started the day. Remember, it started the day in the futures way down, and then it up I think 100 and something points.
Yeah, it really wasn't a big up day. But what I'm saying in all of this is that the market reacts to the rumors, the expectations, and generally not to the news. The actual events that, when they happen, have almost always, unless it's a massive surprise, been baked into the cake. Thanks for the call, Gaurav. Great question.
Yeah, it is.
Absolutely wonderful question. 855-935-TALK's our number. Let's sneak Gene in real fast. Gene, welcome to Talking Real Money.
Well, good afternoon, gentlemen.
Hey.
Hi, Gene.
I had a question about contributions and distributions to an IRA. And I'm not too far away from having to take required minimum distributions, but I'm still going to have income. You know, I've got a couple businesses and that sort of thing. So I guess my question is, even though I have to take distributions, can I continue to contribute to my IRA?
If you have earned income.
to your IRA. This is not a 401, not a retirement plan, but an individual retirement account, correct?
Right. Yeah, I have a SEP IRA and a regular IRA.
Yeah, within the rules of whatever they would be, with I think as the max between the two of them would still be the $7,000.
Yeah, but I think as long as you have earned income, you can contribute. You just have to start taking withdrawals.
Okay. Yeah. I mean, because the limit on the SEP is 50,000.
Right. Yeah. Right.
It's high on SEP.
A percentage of my.
I don't think you can do both of those. That was what I was trying to say. I think if you do the SEP at 50, you cannot do an individual retirement account as well. We'll check on that though to be sure.
Yeah, I'll check on it to be sure. I'll mention it later. Thanks so much for the call, Gene. We appreciate it. 855-935-TALK is our number.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And don't forget Tom's last class. He sold out every one of them. His final lunch ed is coming up on the 22nd, and there are still some tickets available, but they won't last because everything's sold out up to now. So go get your tickets for this lunch ed event right now at TalkingRealMoney.com. TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.